August 23rd, market analysis, Stan Ehrlich. Good morning. We are currently 9 o'clock California time, 2.5 hours after the market's opened. So we have some good price action developing already. I talked about the gap yesterday and how they are almost always filled. So I'm going to start in with the spider SPY and show you the big down gap over the weekend. So Monday morning we open sharply lower and come down and fill the gap I was talking about just a few days earlier. Actually filling it very accurately. The high is just a little bit above the gap that you can see here from August 9th to August 10th. That's where the gap occurred on the way up. And we filled in that with price action on Monday, a little higher than the gap top and a little lower than the gap bottom, almost fitting perfectly, not quite, but that's fine as long as the gap is filled, which it is. Now we gapped down yesterday. Gaps are almost always filled. Again, I repeat, gaps are like black holes in space. They tend to suck the price action back into them, and it just did it yesterday from a gap earlier in the month. But in the process, we are now getting fairly oversold, not terrible, not quite down to 30. Currently we're at 36 and a change, so we need to get below 30 at a minimum. I like 25 or lower to be oversold. So no, we're not oversold, but we have this gap above the market to get filled, and it's in the DIA, and it's in the NASDAQ, and it's in the Russell 2000. All four of the indexes I like to watch have these down gaps yesterday. So we're probably going to have some significant effort to come back up and close the gap. Now, there's something special about yesterday's gap. There are three types of gaps. There's what's called a breakaway gap, or a common gap, and an exhaustion gap. The breakaway gaps are commonly after a market goes sideways for a while, a week or two or longer, and jumps out of, jump meaning up, gaps up out of, or gaps down out of the trading range it used to have. That's a breakaway gap. Those gaps are oftentimes not filled because of the rarity and the importance of them starting a new trend. Either it was going up to begin with, went sideways, and then gapped up again to perpetuate the bull trend, continuing it, or they changed the trend and gapped down, starting something on the downside. This is on the downside. This could be construed as a breakaway gap over the weekend. It may not get filled completely. Maybe partially, maybe not at all. I'm a little bit concerned that we may not go back up and close that gap, but that would give you a great opportunity for a new short sale. I have a little alarm line at the gap closure price if it gets there. I'm well aware of the likelihood of it being closed being a little bit iffy, but if it does, this is a great place for a potential short sale, and the price of that line, give or take a little bit, is around 21.20, 421.20. So breakaway gap maybe, not going to look back. You know bear markets fall apart very quickly and very fast, so that corroborates no gap closure, no rally. I think that's what's going to happen. Currently we're down a little bit, 85 on the spider, $1.60 in the DIA, Dow Jones, and only 24 cents, nothing to speak of on the QQQs at the moment. Okay, so gaps are very important. This gap is particularly important because it could be that breakaway and not get filled. The old gap, well, it's done on the spider. It's just history now. Are we going to go straight down, collapsing very quickly? I think it's quite plausible. I cannot rule that out. We've already had 2 sharp down days. If we go down sharply, I'll say 5 points, maybe 10 again, we will be in oversold territory. We will get down to this support area, approximately 409, a little bit below 410. There's good support in there. Not good, but some. Yeah, and it's corroborated also by a lot of lows that happened back in what I call the 9 days of pain. It gave me some problems. back here in August. January, March, April, May. Sorry, May, not August, current month. May. So some support around 10, 409, 8, even into 407. 407 to 410. 410. We're 12, so we're not very far away. But if you get down to 7, that's another 5 points. If you get even lower, you're breaking support and getting into a little bit of a no man's land and could fall another several points or more without having a problem. Boy, that would be a big down day if it happened today. That'd be over 10 points. And I just plain can't rule it out. That's how bear markets act. They tend to fall apart before you even realize they're falling apart. You're not paying attention. You're the average person. You got an occupation. You can't watch the charts, but I do. This is my occupation. A broker 35 years in the business, 51 years. So, you know I'm bearish, and you know I'm bearish, very bearish, to new lows completely, and my long-term downside objective is 340, I believe, around 340. So that would be 70 points, 70 big fat points lower, 340-ish. And I think it might be October, which is what, 5 weeks away? That would be one hell of a crash. Probably too much to ask for. So probably not. Something around the previous lows, maybe in October, for the whole damn trend, and then a bounce for a couple of months, and then maybe around the end of the year coming down even more. So I'll talk about the October lows as we get closer to October, and I'm going to talk about the Santa Claus rally. I've seen lots of those, both of them, 51 of them. So I know how they act, should act, when, where, how, etc., etc. So those are two great seasonal tendencies that have a very high historical reliability coming up toward the end of the year. October lows, Santa Claus rally. I mentioned before the cycle on the E-mini. We're starting to come down, so maybe that's all we get out of this last cycle low. It's not the best cycle. I'm not concerned about the tops, the red lines. I'm only concerned about the green cycle low bottoms. Caught a bottom, excellent COVID low. Between two lows, close. That was pretty good in an uptrend that never came down much to begin with. That was pretty good, same comments. And of course this latest one, down around 364, excuse me, is going to be challenged. And again, that might be the October lows. Wouldn't be surprised. Test of previous bottoms. 5 weeks to go. Whoops, didn't mean to minimize that or resize it. Sorry about that. And go to the euros. Below par, 0.9907. Wow. Around the low of the day, heading Tierra del Fuego. That means land of the south in Spanish. Or Spanish for head south. It's like go to Alaska. It means head north. Anyway, last little quickie. A few days ago, when I started these recordings, I talked to you about this short sale in hogs. We got the signal. We actually got a good fill on ER3, extremely close to the high of the rally, 4 ticks. And that's the high of the day for all practical purposes. Went sharply down the next day, a little bit more, and then started to turn around yesterday. And I don't know, maybe it's going to fail today. A little rally this morning, and then it's now lower than where it opened, and it's almost unchanged. Just up a tiny bit. Last chart. Let's go back to good. And I just got to show you this. This is the NASDAQ futures and the QQQ. And where is my, there it is. We had a bearish engulfing. Again, I've mentioned this last few days. On the top of the rally, the high day. My ER system is built to find these turning points. Got short the next day on the rally. Here's the 1 minute chart to show you how and where. Right there. 11:15, give or take a couple of minutes California time on the 17th of August. We sold it short at the trigger, the red line, 33.75, give or take a small, tiny bit. We're short at 33.35, period. We're still short. The green equity line is down to 314.44 at the moment. Our trailing stop, the yellow line, STS Smart Trailing Stop, has come down and down and down. So we're now locking in a profit of 12.5 points. And the other information on this little label in the bottom left-hand corner, custom label, tells us other information. This trade is doing great. It's a major stock market index, the Qs, the NASDAQ, QQQ. I'll leave you on a high note. Thank you very much. Have a great day. I'll be back tomorrow morning.